welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Alok Patel, Joint Managing Director at Arman Financial Services, joining in. Welcome to the show, Alok. And as always, a pleasure to speak to you as well. Alok, my first question coming to you is, overall, how would you actually describe the third quarter vis-a-vis what we've seen in the previous quarters, taking into consideration the impact of COVID?
Yeah, so I think, the year started out on a very pessimistic note with the second wave, which in very many ways, at least for the company, was much more damaging than the first wave. Whatever recoveries that were made until March 2021 went down quite a bit again, and it took us almost the rest of this year to get them back to what they were in the March 2021 levels. Q3 was much better, I guess. At least the beginning of the optimism. Disbursements were almost 3 crore shy of 300 crores for the quarter, and which is the highest it's been. And we have crossed a very important milestone of in our AUM. We crossed 1,000 crores of AUM.
Wow.
So that was, I think it was delayed by about a year and a half or year and a quarter. But it's important that we reach this milestone, and it also had a very positive psychological impact on the team and everybody else. So, the year, as I said, started pessimistically. Q3 was much better. Rating was increased to a A- from a BBB+. We also entered into Bihar this quarter as well. So overall, a lot to be thankful for, especially in Q3, and hoping Q4 is even better.
Right. So overall, Alok, in terms of where COVID-related provisioning is concerned, though Q3 was better, so has the provisioning also gone down?
Yeah, I think overall we are sitting on, I believe, almost 62 or 63 crores worth of provisioning right now. While the provisioning itself on a balance sheet figure has not gone down, the overall quarterly provisioning that we had to make has gone down consistently every quarter. So, I think COVID-related provisioning, I think I can confidently say that for MSME and two-wheeler book, we are probably done with COVID-related provisioning in that book. In the microfinance, it's tapering off every quarter. Obviously, it's going down every quarter. I think we'll be done in probably in Q1 of FY23. Will probably be done with all COVID-related provisioning. So another about 4.5 to 5 months to go.
Right. And overall, between the three segments of business, where are you seeing higher traction, and where is it, do you think, you will be putting in majority efforts over the next 12 to 18 months to see growth?
Well, as far as traction goes, obviously there is a large demand in the MFI segment, and this is primarily due to the way the products are structured. So MSME demands a special kind of customer, and it requires very deep diving into their business and their cash flows. So it leads to a lot of rejections, and MFIs had a lot of pent-up demand, and liquidity is flowing more easily into this segment. So thanks to various measures by the government, such as the CGS scheme, so that was, we saw a lot of money coming in specifically towards that segment in the last quarter, almost 225 odd crores coming in through the CGS scheme. So in the short term, at least it seems MFI, but in the long term, if you talk about medium to long term, I think the focus is shifting away in the market, at least from the group-based microfinance loans into, individual-based loans. So you should see a lot of, at least in the medium to long term, the weightages of growth shift from more the group-based lending, which is JLG microfinance-based lending, into individual forms of lending. So MSME is one of the individual forms of, so to speak, micro lending. We have another individual lending product also that we are piloting through our specifically targeted to our MFI customers as well. So I think we have a pretty, we are optimistic on that kind of loan structures in the future.
Right. And overall, in terms of collections, we've remained healthy and above 92%. Do you think this would improve in the coming quarters?
Yeah, absolutely. So I think as far as collection efficiencies, it's been kind of a roller coaster in the last, 1 year and 9 months. Obviously, pre-COVID, we were at about 98%, slightly higher than that. During the lockdowns, it went down almost to zero. Slowly crept back up to 95% in, I believe, Feb of 2021, and back down to 75% in May of 21. Now we are back up to about 94% in January, a little bit higher in Feb. I think the overall, as the old pre-COVID stuff kind of matures and provided for or written off, it should approach somewhere around 98%, which is back to pre-COVID levels in end of Q1 to beginning of Q2 of FY23. So that is the expectation. And after that, it should be about a steady state. So we are not, I don't think we are going to get to a 100% repayment rate kind of a scenario, what it was 5-10 years ago. The industry has changed, microfinance has changed. The customers have changed, and there is a lot more competition and penetration now. So that's my feeling. If it's better than that, obviously nobody will be happier than myself.
Right. And in terms of profitability as well, we've seen a good jump on a Q-on-Q basis. And if we have to compare, a Q3 of FY21 to now, it's more than doubled as well. So do you think we will be able to maintain this kind of a run rate in the coming quarters?
Yeah, I think, I think it's probably, there has been quite a large jump, but we are still far from where we were on a pre-COVID level. Our ROEs were, north of 30%. Now, those were unusual years, so to speak. But overall, the hope is that, yes, I think as the COVID kind of impact goes down, and even from an operating cost perspective, because collecting money, defaulter money or collecting overdue money is expensive, right? I mean, you have to go home to home, you have to devote a lot of time, resources, HR towards that task. So as we go down the road, not only provisions will decline, but overall operating cost will also decline. And I guess one more thing to talk about is this new RBI circular, which is expected to come out. So the white paper was shared about, 4 or 5 months ago, where they are, first of all, removing the regulatory arbitrage, which was there specifically for the non-NBFC MFI practitioners, such as the SFBs and stuff. So the competition will be a little bit tilted. I mean, it'll be, how shall I put it? The operating environment in terms of competition will be slightly better off. But more importantly, they are removing the margin caps in the, or at least the proposal was to remove the margin caps. So I think that should also allow us to penetrate into areas which were, too expensive to operate in, or too risky to operate in, or so have you. As long as we can price those things into the product, that will allow us to expand into other areas, and I think profitability should increase as a result of that as well.
Right. And on the asset quality front, how are we seeing the roadmap?
Yeah, so as I said, I mean, I think we expect to go back to, see, the good news on the asset quality front is that everything that we have dispersed post COVID, right? So I'm talking about when we resumed our disbursements in August of September of 2020. So that repayment rate is about 98, 99%, right? I mean, well, almost 99%, I should say. And that has been over a year and a half. So it's not like newly dispersed loans or anything like that. Typically for the first 6 months, everybody pays. But I mean, these are almost mature or maturing customers. And that we have been extremely careful of. The problem obviously lies in the pre-COVID stuff, the stuff which has been there's dispersed before March of 2020. So, I think most of those customers will mature by Q1 or Q2 of FY23. And then either they'll be provided for, written off, or collected. But as long as we maintain the newly dispersed loans at 99 or 98%, we should be okay. So it's not a very long time to wait for. I think the disclaimer here is that if there is something like the second wave that comes in, obviously we just went through the third wave and that was touch wood, not too bad. I think the infection rates were very high, but overall it did not have too much of an impact on the business. So as long as there is no fourth wave or there is no serious further COVID waves like the second wave, I think that we are almost past this. I think a couple of more quarters and things should be back to normal.
Right. And again, on the cost of fund side, from here on, are we expecting further improvement, which could improve our margins?
Unfortunately, no. So I think we are at probably the lowest level that we have been. And a lot of it is also thanks to stuff like the CGS scheme and, NABARD and SIDBI and Mudra support, which typically does not come on a normal, ongoing business since COVID liquidity is being pushed. So those were funds received at a very, very kind of a competitive or less than competitive rate. So I think maintaining this rate will be probably a challenge if you talk about the next 2-3 quarters. Overall, reducing it further seems unlikely.
Right. And overall, from here on, in terms of expansion as well, clearly, if you go to see with regards to expansion, newer geographies that we are looking to target, and where is majority of the traction coming from?
Yeah, so I think just last quarter, we started our expansion plan into Bihar. So we have opened up some 5 properties. That is a continuous expansion from our UP portfolio. So from Eastern UP, we are moving towards Western Bihar. And we have opened up recently in Haryana as well. So we are in 8 states. There are a lot of places to open. Primarily, the expansion or the portfolio increases seems to be mainly in UP, in Rajasthan, and soon to be maybe Haryana and Bihar as well, depending on how those expansion plans go. Maharashtra is kind of reducing. Gujarat is increasing slightly, but that's a mature market. MP is, kind of steady to increasing to a certain extent. So I think a lot of the major regional growth areas will be Rajasthan, UP, Haryana, Bihar in the coming year.
Okay. And overall, apart from newer geographies as well, I know we've crossed one of the key milestones in terms of AUM growth. What are the next milestones that we're looking to achieve?
It took us about when we started in 2010 with microfinance and everything, it took us about 4 or 5 years to cross the 100 crore mark, another 4 or 5 years to cross the 1,000 crore mark. I don't know. I don't really know what the next milestone should be, whether it should be 2,000 or 5,000 or anything like that. But I think let us wait for this new RBI circular to come out, because that my expectation is really going to be a game changer. So you can call it microfinance 3.0 or something like that, and it's going to take a complete circle, right? And I think you're going to see a lot more innovative products coming out to service the rural customers, whether it be affordable housing or the individual loans, as I mentioned. So this is a segment which is constantly evolving. As far as milestones goes, I don't know, maybe 5,000 crores, but I haven't really thought when and how we'll get there. Obviously, it's a continuous process of one milestone after the other.
Right. And overall, in terms of FY23, what's the growth outlook looking like?
So again, so we are still working on that. And I hate to, I guess, kind of give the same answer, but a lot depends again on when and how that circular looks like. At a minimum, we'll be targeting about a 35 to 40% growth in the coming year. So we are at about an AUM of 1,050 crores. The disbursement expectation is somewhere around 300 to 325 crores of disbursement. So the hope is we'll reach somewhere around 1150 to 1200 crores at the most of AUM by March 31st of this year, if all goes well. And another 35 to 40% of growth on top of that is what I am planning typically. If it's higher than that, it would depend on how that circular kind of looks.
Right. All right, Alok. Thank you so much for speaking to us. I think great insights that we always pick up from you. Thank you. Congratulations once again.
Thank you.
Stay safe.
Thank you so much, you too. Take care. Bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.